I'm Nicholas Bornozis, President of Capital Link, and I would like to welcome you all from New York to today's webinar. We have launched as Capital Link a series of webinars aimed to raise awareness about Greece on a number of critical developments that are taking place right now in the country. And we're trying to create momentum, culminating with our the 22nd annual Capital Link Invest in Greece Forum, which will take place on December 15 and 16. So we have today's webinar is going to focus on the very critical topic of the new landscape of corporate governance in Greece. Corporate governance is a topic of great interest and concern for all international investors, and there has been a significant overhaul of the corporate governance landscape in Greece. So I would like to, we have with us a panel of great experts, including the Dr. Vassiliki Lazarakou, who is chairing the Greek Capital Markets Commission. And of course, we have, I will let actually Natasha Martsekis, who is going to be the moderator, and introduce all the panelists. I would like to thank Natasha for putting this panel together and actually coming up with the idea for this panel. Natasha is a founder and board member of the non-executive director Club of Greece. And she has a very big involvement with the Greek financial sector. So I will turn it over to Natasha, thank her, introduce the panelists, and we go on. And I see we already have very good participation.
Thank you, Nicholas. Good afternoon, ladies and gentlemen. Good morning to those attending from the US. Thank you for taking the time to watch this webinar organized by Capital Link in order to discuss the recently voted new corporate governance law 4706 in Greece, and explore also the main challenges and the opportunities for the Greek listed companies. But first, let me introduce our distinguished panelists today by order of their participation, who will be sharing their views on our topic. Dr. Vassiliki Lazarakou, the chairwoman of the Capital Markets Commission, needs no real introduction, as she has played a very pivotal role in the deep reforms that the new law dictates. Mr. Alexandros Kosmopoulos from Kosmopoulos law firm, he will be educating us about the main legal changes that the new law brings for the Greek corporates. We have also the pleasure of having with us Cristina Ungureanu, Head of Corporate Governance, ESG and Strategic Activism from Eurizon Capital, one of the largest Italian asset managers, who will be sharing with us her perspective about how global institutional investors with holdings in the Greek market view the new law. And last but not least, Mr. Alexandros Maglaras, Chief Investment Officer from Triton Asset Management. He will be discussing with us his view for the new law from the view of the local investment point of view. So ladies and gentlemen, thank you very much for giving me the opportunity to moderate the panel. I expect our discussion to last approximately 45 minutes. Then I will open the floor to questions from our audience. And now I would like to turn to our keynote speaker, Mrs. Lazarakou, and address her my first question. Mrs. Lazarakou, what is the framework of the new law of corporate governance as recently voted in July? And which are the major issues that the new law is addressing?
Thank you, Natasha. Thank you also. I would like to thank the Capital Link and Mr. Bornozis for the invitation. And because this is, I think, a great opportunity for us to discuss something which is really something which modernizes the current framework on corporate governance. So let me take the opportunity and discuss a little bit how the new law enhances all the mechanisms of the Greek corporate company, of the Greek companies, and how this changes the capital market framework in respect of this specific issue, the corporate governance. So I have to say that the new board of directors of the Capital Market Commission, which actually is the one that after they proposed this new law to the ministry, so the new board had set always as a priority the reform of the legislative framework of the capital markets, starting with the one on capital governance of listed companies, which in our view is of major importance, especially further to problems that have occurred in the Greek market the recent years. So we are very satisfied that this specific law, which was proposed by us in an attempt, as I said, to modernize the framework, was accepted also so broadly from the Greek parliament. And it was voted, 4 out of 5 members voted in favor of the specific law, which shows that the Greek society is ready for a new change, because the last law was enacted back in 2002. So I would like to highlight that the proposal of the Commission was after a really thorough study of the framework, and we try to see what in practice was the problem and what kind of solutions would suggest in order to amend specific issues and specific inefficiencies. So, for example, the internal audit, we saw that there were inadequacies that mainly concerned the employees working with internal audit control issues. So for example, the employees were not full-time, were only part-time. So we try to see each item, let's say, issue that was of concern as far as the audit mechanism of a company is concerned, and we try to see how we can remedy all these issues. So having said that, the proposals and the main changes were the following, if I may just go through and see what are the real main changes of the law. So the one was the strengthening of the unit of internal audit, mainly by both increasing the auditors' required professional standards and by enhancing the unit's administrative and operational functions. So internal audit first. Second, we tried to have a more efficient, we tried to propose, and it was further adapted, a more efficient structure of the board of directors of the listed companies, with an obligation to adapt a policy for the suitability of the members of the board of directors. This is something very new. It wasn't existing before. So the board of directors of the companies now must adapt a policy concerning the suitability of their own members. And also, there was a new provision in the law regarding the gender equality reasons, requiring the boards to have a 25 minimum representation per gender, minimum representation of the underrepresented gender, which in our case, of course, is women. And I guess this is in the case in the whole universe. But anyway, so that was a new gender law provision. Then another change was the adoption of new criteria which should be met to characterize the members of the board of directors as independent. So in accordance with the recommendation of the European Commission, there was an expansion of the criteria that are going to be used in order to characterize members as independent. And this is very important because at the same time, there was a real attempt to enhance the role of the independent members, because we all understand how important their role is in a company. Also, there was a requirement for the internal organization, for the internal regulation, to describe better the functions and policies of the companies, emphasizing on the procedures that shall be followed in order to fully cover the need for transparency and minority shareholders' rights. There was also an obligation to establish either 2 or 1 committee for both issues, which were these: committee for remuneration and committee for nomination. It can be also 1 committee for cost purposes. So the said committees operate based on a strict regulation that should be published, and consist of non-executive members of the board of directors, the majority of which are independent again. And plus, there was another change regarding the funds, the obligation to give reporting as far as the funds raised through the market. So the law expands the obligations of providing information to bond loans as well, because we have seen that a lot of bond loans are being issued the last years in Greece. So that, let's say, if I may say, these were the main changes that we all try to see how we can further, let's say, try to change the legal landscape in order to have a safer environment as far as corporate governance is concerned.
Thank you, Mrs. Lazarakou. It's very clear indeed the vital role that the new law is playing in Greece's capital markets modernization. And I will be using your introduction following with a question to Mr. Kosmopoulos. Mr. Kosmopoulos, admittedly, the new law, as Mrs. Lazarakou mentioned, brings a lot of changes. Could you please walk us through, more specifically, the changes regarding the BOD criteria and the BOD composition criteria, and also the new role of the non-executive directors? Thank you.
Well, thank you very much, Ms. Martsekis, for the introduction, and many thanks to Capital Link for their kind invitation. It is definitely a great privilege to be among such distinguished panelists. I would like to very briefly share a quick presentation to assist with the delivery. I hope you can see it now on your screens.
Thank you, we can, yes.
Okay, the time is very limited, so it is not possible to go through all that content in detail. As you mentioned, the new law, the new Greek corporate governance law, was enacted in July 2020. This is 20 years following its predecessor law, and the experience has been disappointing. Now, considering how deep the disappointment has been, the reforms needed to be extensive, comprehensive, and ambitious. And this is what the law does, in my opinion. In order to achieve that, the law builds on a set of established precedents from international best practices, also the experience of regulation of financial institutions, and signals a significant shift in its approach from formalistic tick the box requirements to matters of substance. This is underpinned by a number of factors, including the requirement for the different components to interact, including the policies and procedures and the organizational components, the requirement for periodic review, self-assessment, and external validation of policies and procedures, as well as requirements for enhanced transparency, disclosure, and obviously sanctions. Sanctions is I think it's a thorny issue. It has been criticized as potentially, sanctions have been criticized as potentially being draconian, but I think they emphasize the commitment of the regulator to getting things done. Companies have 1 full year to comply until July 2020. This is obviously sufficient time, and I think the fact that the Commission has already been active in implementing regulations and guidance is again a signal that timely implementation will be required. If we move on to the Board of Directors, the key highlights are obviously, as Ms. Lazarakou mentioned, the suitability requirements. Suitability operates at 2 different levels, both individual and collective. And this again follows the precedent of regulated institutions and the joint recommendations of EBA, ESMA on collective suitability. Individual directors must be fit and proper to discharge their duties properly. They must possess the skills, the knowledge, the professional assurance, the assurances of professional integrity and independent judgment. The board taken as a whole must be adapted to the specific set of risks, the nature of the activities of the company, and the challenges that it faces. All in all, the directors need to interact on a more active basis and promote constructive dialogue and even debate in the long-term interest of shareholders. One very helpful introduction, in my opinion, is the clear delineation of the duties of executive directors and non-executive directors, and in particular, the introduction of a duty of non-executive directors to constantly monitor the implementation of the executive power of the executive strategy. So therefore, there is no room for passive bystanders. All members of the board must bring together the skills on the table. They must also act as a balance of the others' responsibilities and functions. Ms. Lazarakou also discussed diversity and non-discrimination, as well as the introduction of the minimum 25% female representation quota. The law introduces now expressly a requirement for the chairperson to be a non-executive director. By way of fallback, if the chairman is an executive director, the board must appoint a deputy chairperson. at least 1/3 of the board must be comprised of independent directors. And independent directors now have both enhanced independence and a new role. Enhanced independence, as Ms. Lazarakou again mentioned, comes from the definition of independence as a broader concept. It is now up to the responsibility of the board to both assess independence and review it on a periodic basis, at least annually. In addition, the exclusion criteria for independent directors are no longer an exhaustive list. It is an indicative, quite thorough list that goes back as many as 3 years prior to the initial nomination, and even excludes independent directors if they have completed a tenure of 9 years in such capacity. Independent directors now have a more pronounced involvement in the operation of the board. The law introduces a special quorum in respect of certain key decisions of the board of directors, and at least 2 independent board members must be present whenever the board decides on financial statements or the adoption of recommendations to the board of directors that require enhanced majority at the shareholder level. In addition, independent members staff the majority of the committees, and they are also required to file their own reports to the general meeting side by side those of the board taken as a whole. This was a faculty in the old regime, and now it is a mandatory duty of the independent members. Natasha, I don't know if we have a couple of minutes just to go very quickly through the policies and procedures, perhaps.
Yes, please. Just 2 more minutes on the policies. That would be great. Thank you very much.
Thank you. Thank you. The law introduces a comprehensive internal audit environment that is a combination of policies and procedures on the one hand and organizational components on the other. Policies and procedures include the corporate governance policy that is an overarching set of key principles, including those relating to internal audit, risk management, regulatory compliance, and conflicts. And also the internal audit system, that is a concept borrowed from the successful precedent of banks. It is a comprehensive set of internal audit mechanisms designed to promote the efficient and safe operation of the company. The operating regulation is retained, but it is enhanced both in terms of its scope as well as the inclusion of periodic review procedures by external experts in respect of the internal audit system. And last but not least, companies are now required to adopt and implement a recognized corporate governance code. There are also, to complement that, there are also organizational components. We can perhaps speak very briefly about these if time permits. I think the key introduction, and Ms. Lazarakou emphasized that, is with the internal audit unit. It is now promoted to a unit. It needs to be adequately staffed. It needs to be staffed by professionals possessing the appropriate qualifications and enhanced independence. And they are also required to request resources from the audit through the audit committee to allow them to actually implement their audit plan. Last but not least, the head of the unit acts as liaison between the corporation and the Hellenic Capital Markets Commission. I think all these enhancements taken as a whole signal a strong shift in the right direction. These reforms had been long overdue, and I think they operate to raise the minimum standard, because ultimately the market will be judged not by the performance of the handful of few companies that are already exceeding those standards, but rather by the average or even the underperformers. Thank you.
Thank you, Alexandros. It is evident from these requirements, obviously the focus on the stricter criteria for the BOD members, and also the fact that the new law practically empowers the participation of the non-executive directors. Now, turning to Cristina. Cristina, welcome. Best corporate governance practices for listed companies are very closely followed now by global investors. Having you on this panel, I'm quite curious to understand, how do you as global investors approach these best practices, and how do you incorporate them in your investment process, especially with the phenomenal growth of the ESG funds recently?
Mm-hmm. Thank you, Natasha. Thank you for the invitation. This is extremely exciting times for Greece. So also for us investors that look towards Greece evolving corporate governance principles and laws in this case. I think everything that has been mentioned is extremely interesting. I mean, the attention to the board, to policies and procedures, it's all aligning to global best practices. And this will certainly open up a lot of dialogue and curiosity from global investors wanting to understand how companies will implement all these requirements. So linking that to the fact that many global investors, if not most global investors, are becoming ever more active. They approach a policy, we call it active ownership. So we are not only shareholders, but we are really active owners of companies. Importantly, the activity of stewardship, we call it stewardship, which means monitoring companies, engaging, so speaking with companies, and voting at general meetings has become extremely important for global investors. As far as we are concerned, indeed, as you say, Natasha, while global investors, also us, put a lot of effort in developing specific ESG products, and I will speak a little bit more about that later, we also evolve our activity of so-called active ownership, so stewardship, becoming ever more incisive in expressing ourselves through the dialogue we have with companies and through the voting process. And the main objectives are having certainly such an active approach, integrating ESG factors into investment decisions. And in this way, we obviously are able to maximize returns for our clients, our asset owners. In our case, as many other global investors, we adopted the Italian, in our case, because we are one of the largest Italian asset managers. We adopted the Italian stewardship principles, which mean we are promoting active investment through the processes that I've mentioned. We also signed up to the PRI principles as many large global investors, which are the principles for responsible investment, which also look towards improving the governance as well as sustainability of the issuer companies through integrating ESG principles into the investment process and strategy. In our case, as many large investors, we have set a specific structure which looks after active investment or stewardship, and which overlooks the ESG engagement and voting activity. So very focused activity on the side of the investors. We will certainly look towards Greek companies ever more after the implementation of this law. What is relevant for us is that it is increasingly, our approach, it is increasingly inclusive. So this team, which I'm responsible for active investment, is positioned within the overall investment department, which means that we are collaborating with the portfolio manager and analysts, so the ones who make the investment decisions, in order to ensure an effective outcome of our ESG integration within the investment process. Apart from this active investment team, as I mentioned, and as you highlighted, it's the importance of ESG specific funds. So we also have a specific team that is only investing in ESG or SRI funds. And the name speaks for itself. It's called Long-Term Sustainable Strategy Team. This team integrates the traditional financial analysis with certain metrics related to environment and social and governance that our own proprietary system considers the most important aspects in terms of materiality, which is another important concept. So this team has developed several ESG specific products. However, the integration of the ESG factors within the whole investment strategy is for us happening for all active funds. So basically in 2017, we officially changed the investment process in order to accommodate this ESG integration into the entire investment process through various strategies, and one of the main one is the active investment that I was mentioning. Therefore, active ownership and sustainability, I would say it permits all areas of business. It is like an active ownership spirit, an ESG integration spirit. They are not just nice things to have, but a real driver for the way we actually invest and the way we do business. Certainly, as regards our stewardship activity, it's important also to say how do we interact with companies, and I will speak more maybe about engagement, but we have to have well-defined criteria. We invest in thousands of companies and we cannot be active on every company. Therefore, we have well-defined criteria for this active investment approach. And that means engagement and shareholder meeting participation, where we apply a so-called proportionality principle, which is actually a principle that is required also by the recent Shareholder Rights Directive, the European directive that I'm sure the audience know about, which means that you have to focus on your relevant issuer that will have a material impact on your investment decision as well. In our case, we defined specific criteria relating to meeting certain numerical holding thresholds. So where we have important exposure to companies, where we have an important position in companies, certainly we will monitor and we will engage with these companies. We have situations where we want to support minority shareholder rights. So a very good example is board elections. We want the best board members to represent shareholders and not just the majority shareholder, but also the so-called minority shareholders. We also focus on companies with situations where there are ESG relevant concerns or maybe ESG relevant opportunities. And we also intervene at companies that have been holding extraordinary transactions that are relevant for our investment team. So therefore, our approach has been oriented towards rather a very focused analysis of governance and ESG issues of companies, very often also voting on a case-by-case approach, engaging, analyzing companies very thoroughly in order to ensure meeting participation at companies and engagement with companies that are relevant for our portfolio in line with our long-term investment strategy. So long-term is another important concept when having such an active investment approach. Certainly the G in the ESG, so the governance, everything that has been in the eyes of also Greek authorities, but I would say globally, especially in Europe now, there is also consultation on sustainable governance going on. So there is a lot of attention certainly to governance. E and S are also important, but I would say governance is the driver of the whole approach to ESG and sustainability, to a long-term value creation result. Thanks.
Thank you, Cristina. That was a very interesting approach of how you look at companies on a global scale, introducing also the corporate governance principles. And now I would like to hear the local view from Mr. Maglaras, who as a local institutional investor participates actively in the Greek market with Greek holdings. So Mr. Maglaras, what would be your view for the new law as voted recently and described by Mrs. Lazarakou and Mr. Kosmopoulos? Thank you.
Good evening to all our viewers. Thank you, Natasha, for your question and for organizing today's discussion with such an interesting topic. A big thanks to Capital Link as well for their kind invitation and their initiatives to raise the profile of Greece as a business and investment destination. I would also like to share one or two screens. So the new law of corporate governance implemented by the EU implemented the EU directive as regards the encouragement of long-term shareholder engagement. We, as long-term investors, are fully supportive to these initiatives. Corporate governance is a key issue when we engage in open dialogue with companies or exercise our voting rights. And we are looking very carefully in the roles and the responsibilities of board of directors. Could be the balance between execs and non-execs, ethical property, diversity, to name a few. So the new line, the new law came and aligns the local regulatory framework with the long-term investors' expectations, and we believe that it will play a significant role towards strengthening the domestic capital market. We believe that companies that are governed well perform better over the long term, and thus our interest is to advocate for governance behavior. We also believe that we have a fiduciary duty to maximize risk-adjusted returns on investment for our clients and shareholders, while also acknowledging that it is possible to do good and be good at the same time. We believe that we can increase alpha generation and avoid unacceptable risks. So society benefits when companies are well run and asset owners take their responsibility seriously. Voting is an important tool to secure governance and ensures that asset owners are able, as Cristina very well put, to make the boards accountable and guarantee long-term value creation. Now, as a responsible investor, I mean, we are local investors, but we are also responsible, as Cristina mentioned, and there are at least, I think, 5 PRI signatories from Greece currently. So we also have a job which is based on 3 pillars. We are trying to help improve standards of corporate governance, exercise on ownership rights responsibly, and monitoring and managing risks for our investments. While being active owners, we believe that shareholders in publicly listed companies are best served by delegating managerial issues to the company. Attempts by single shareholders to micromanage a dispersed ownership company are likely to frustrate and undermine management, disturb strategy processes, and blur lines of responsibility. So the better option for shareholders is to retreat from detailed involvement in corporate decision-making and hold the board accountable for its actions and outcomes. Having said that, we would like to emphasize, as Cristina very well put again, that there is no ESG without the G. And there will be no ESG in the broader market of Greece without the relevant law. Now, without the governance, you cannot achieve ENS, okay? You can only have very, very poor results. So please allow me to share a fact from our company as well. I mean, in the proprietary Triton ESG factor breakdown, we weight G to be above 50% currently in our ESG committee. So the point we want to demonstrate with this slide is that boards should ensure that companies have clear policies and integrate relevant measures into strategy, risk management, and reporting in order to address all long-term risks presented here. Investors and other stakeholders may press with their own toolkit for equal treatment of shareholders and board accountability, but the board itself should do all the rest. That is why this reform lies as a cornerstone for all active ownership focus areas. So I could say we're excited about this important development for our market.
Thank you, Alexandros. That was a very interesting view for the local market from a local point of view. And now I would like to come back to Mrs. Lazarakou and ask her, actually, apart from the law, what further amendments do you think are necessary in order to ensure a successful implementation of the new law? And could you please briefly describe the enhanced role of the Capital Markets Commission in this process? Thank you. Can you please open your mic? Thank you.
First of all, let me start by saying that I'm very pleased with all the positive remarks regarding this law. So we're in a good, we have, let's say, started in a positive mood. So let me say that, as Mr. Kosmopoulos said, we have 1 year for the deadline is 1 year for the provisions regarding corporate governance to become in force. So there is 1 year preparation for the listed companies in order to get acquainted with all this new framework and in order to get ready and prepare the policies and everything. So what the Commission has to do in order to assist them to be prepared is to issue regulatory decisions. We have already issued 2 regulatory decisions. The one was in regarding the sanctions and the way these sanctions will be assessed and computed. So that was already issued at the end of September after consultation with the market participants, plus another one regarding the evaluation of the system of internal control and all details relating to this system, because we have a new concept in this law, which is the system of internal control that is very important. And actually there's another innovation, let's say, of this law is that there was an adoption to have an obligation per 2 years, after every 2 years, to have an assessment of an external consultant of the system of internal control. So yes, these are 2 things, 2 decisions, 2 regulatory decisions that have already been issued by the Commission in order to provide guidelines to the listed companies and help them get prepared. And also we have issued, we have issued guidelines regarding the policy of suitability that the listed companies have to adapt in order to decide, in order to, let's say, select the board members. The aim was, of course, to ensure that we will eliminate any kind of ambiguities that could exist, and in order to help, let's say, create a safer environment for the listed companies. There are more decisions that could be issued by us, but these were the major 3 decisions, and that was in an attempt from the regulator, from us, to make sure that we provide as many guidelines as possible to all listed companies. Now, having said that, it is very important that they are all prepared, because after this 1 year deadline, the supervision will start immediately from July 2020 to 21. So after that, we will be there to impose sanctions if necessary, if we see that there are breaches and everything. So we are prone, we are here, we are helping, we are assisting, we are trying to help everybody in order to understand how important corporate governance is for the companies, because it also helps the companies, let's say, helps the value of the companies, primarily benefit the companies themselves. And we don't want them to feel that they have to comply with the regulations, because after that, the Commission will come and impose fines. We want them to understand that it is very important for them to adapt and realize how important for the market growth is to have real governance rules, because as Cristina and Alexandros also said, we don't have ESG without governance. No investor will go and invest in a company if they are not assured that the company has real governance and they can really operate in a smooth and efficient way. So these are all the actions that the Commission is trying to do within this 1 year. And I think these are the major things. And thank you, Alexandros Kosmopoulos, for having such a detailed analysis of the law, because I don't have to go into details, because I was thinking that there were 2 things that I didn't really analyze a lot. For example, the adoption of the recognized corporate governance code, because this is also something that the companies will have to get prepared. So I'm happy to answer any questions regarding all the actions that the listed companies will have to get through within this year.
Thank you for that very interesting point. And now back to you, Mr. Kosmopoulos. Having listened Mrs. Lazarakou, regarding the law amendments and beyond the law amendments, what would you view as really necessary elements that they are required for the law to succeed in practice?
Well, thank you, Natasha. I think Ms. Lazarakou pretty much alluded to each of these steps, but if I may just rephrase them, I think in the short term, what we would expect is an enhanced quality of enforcement, because in the past we had an insufficient law with insufficient enforcement on the part of the regulator. It is sad but true. So we are looking forward to the commission having a more active role, a more proactive role. It is hoped that the commission will have appropriate resources to make sure that the principles of the law are actually observed. The fear of sanctions is not the proper incentive to comply. So this is why this is the short-term approach. In the medium-term approach, the companies should actually realize that complying with these standards, as I think all of the speakers have said, results in benefits in the form of more varied sources of capital, access to capital at a lower cost, and which means that the companies can actually expect to grow through the investment in compliance. And obviously, in the long run, the ultimate objective is to establish a culture, both at the level of the individual companies, because policies and procedures are nothing if the philosophy does not permeate every aspect of the company's activities, and at the level of the market taken as a whole. Because again, I believe strongly that in the eyes of the international investors, the market will be judged by the average or the underperforming companies. The highest performing companies already have access to a varied source of capital and lower cost of funds.
Thank you, Alexandros. Very insightful comments on my point about what is needed in practice to succeed. Now, turning back to Cristina, and I would like to further elaborate, Cristina, on the issue of shareholder engagement in terms of the governance principle. So how do you discuss with the companies that you do have in your portfolios the issues of corporate governance? And how do you actively engage with them in order to embrace these best practices of corporate governance? Can you please open your mic? Thank you.
Indeed. Yeah, indeed, Natasha, this is engagement is an extremely important activity, and certainly you will expect many large investors now to speak to Greek companies. This activity certainly has a strong governance and sustainability focus. However, the engagement activity is not limited to just ESG issues. There are broader discussions with companies on company strategic directions, capital allocation, the future direction of company, all in any way fall under the governance sphere, because governance is ultimately responsible for these topics as well. What is important to say, especially in Europe, the recent evolution of corporate governance codes, because many countries have updated, including Italy, UK, and other Germany, France, have also updated the corporate governance codes, some related to certain corporate governance laws, as in Greece happened now with the law, but obviously it will be interesting to see also the implication with the corporate governance code. So these recent evolution in corporate governance in several jurisdictions have been point of reference for us, for our engagement approach with issuer companies, also on more innovative issues, such as certainly board independence is an important aspect, and we are very pleased to see all the developments in your jurisdictions, but the overall independence of the decision-making process. So looking beyond just the board independence, but the whole procedures and processes, related party transactions, several other aspects that require independence in decision-making. Certainly the diversity policies are aspects that have been included recently in many corporate governance codes across Europe, especially. Consideration of wider stakeholders within companies' long-term strategies, the role of sustainability in the business and the governance framework overall. For example, we have expanded our approach to account for how boards are overseeing ESG related issues. So their role in evolving sustainability in the companies, how companies, for example, are incentivizing executives through remuneration plans in order to fulfill ESG related targets. Certainly board composition, board effectiveness and remuneration are still among the main topics that we discuss with companies, but also these innovative approaches that relate to board functioning role and executive policies, looking certainly long term. It is very important when we talk about engagement and we set up engagement activities, it's very important to establish an objective of the engagement, such as clarifying certain aspects related to strategy, to a specific corporate action, to certainly to ESG related concerns, or to clarify certain items on the shareholder meeting agenda. So before speaking to companies, very clearly having an objective. And linked to that, interlocutors at the other end, so on the side of the companies, are very important. Whom are we talking to? And this depends a lot on the objective of the engagement. We speak to various representatives of companies, from IR to sustainability officers, to CFO, CEO, up to board members, and more specifically board committee members. For example, if we talk about sustainability issues, we may talk to the risk committee members, specifically to the chairperson, or if there is a sustainability committee, to the chair of the sustainability committee, remuneration to the remuneration committee. More and more we speak up to the board level. One of the main aim of, I would say, any global investor of the engagement activity is to build a constructive relationship with the invested company, to make them thrive in comparison with their peers, and deliver returns, concrete returns. So active ownership, the engagement activity, being an active owner, is about helping shape corporate behavior, not just simply having a chat, a dialogue. This is very important. Certainly stakeholder governance, as you mentioned, Natasha, is becoming increasingly important as well, specifically now during this period. But stakeholders overall, not just shareholders, are increasingly holding companies to a higher social standard, demanding a real commitment to responding to issues like health, diversity, human capital, inequality, social impact. So apart from shareholders, employees, customers, suppliers, society at large are very important pillars in creating long-term value for corporations. So also for us as active owners, the company's own stakeholder engagement, so companies' engagement with their own stakeholders, such as employees and the other categories I've mentioned, is another very important metric also for us in measuring the overall behavior and performance of companies. And we have been included mostly recently in the last, I would say, year or two, and I would assume it will be very important for companies in the year to come to have this stakeholder engagement as well, for companies to understand what every category of stakeholder expects for the companies, how company works on behalf, on the benefit for every stakeholder category.
Thank you, Cristina. That was a very interesting insight. And coming back to Mr. Maglaras, from your close interaction with the Greek corporates and having in mind the new corporate governance law, what do you think will be the main challenges for the listed companies to comply when they are trying to comply and create superior shareholder returns under the new corporate governance regime? Thank you.
Natasha, thank you for the question. The truth is that all listed companies need to take a long and hard look at their governance mechanisms as the regulator strives to improve foreign direct investment in Greece. This may result in board reshuffles and certainly the appointment of truly independent non-executive directors who will also be willing and able to go through a rigorous fit and proper process. Let me share again one or two keynotes. So, regarding the Greek corporate companies, currently they face simultaneously the pandemic slowdown, the accelerated digital transformation, cybersecurity threats, risk management, and sustainability challenges. During the 12-month period ending on July 2020, companies should embrace the opportunity offered by the regulator and use proposed best practices and policies to provide sustainable and optimal answers to all the above difficulties, challenges, or opportunities. We believe that size matters, and M&A could lead to larger corporates, which is also needed in the EU next generation package absorption ability of the country. We also like to note that government assets, listed state companies, could lead by example if possible in this area. Family-owned and traditional companies should disrupt themselves with diversity, both gender and background, independency, transparency, and follow this paradigm shift. Under the latest developments of ESG flows of capital, as mentioned, companies should either comply with the law, as Alexandros mentioned a few minutes ago, or, I mean, they should integrate relevant measures into strategy, do the risk management and reporting, or go private, since they will get banned by either exclusion or norms-based ESG filters that we asset managers use in our daily life. In order to optimize the board accountability, as asset managers, we would like to give you one or two details more regarding the quality. We believe that members at listed companies should not serve on more than 5 boards at one time, so they can devote sufficient time to fulfill their responsibility effectively. A chairperson of a leading company should generally not chair the board of another company. Additionally, the company should disclose individual attendance rates and explain absences. And the company should also disclose individual and all external assignments. Now, an important milestone for the Greek corporate companies would be the appropriate corporate disclosure in line with the relevant standards and according to the ESG reporting guide published by Hellenic Exchanges on November 2019. It was late, but now we have it. Greek companies should also protect shareholder rights in equity issuance, avoid multiple share classes, and stick to one share, one vote principle. And implement value-creating for the company CEO remuneration policy, and manage conflict of interest with related party transactions, which is quite important as well. Now, finally, Greek corporate boards should understand that the broader environmental and social consequences of business operation and manage relevant risks and opportunities. Economic activity can impose substantial indirect costs on other companies and society as a whole. So local corporates face global challenges as well. Climate change, water management, human and children rights, corporate tax transparency, corruption, and ocean sustainability. Closing, I would like to remind that the regulator offers, with this law, tested best practices and policies to help companies evolve and become more competitive and sustainable. So let's do this thing.
Thank you, Alexandros. This was a very, very interesting set of points for the Greek challenges and the Greek companies. Before we take the questions from the audience, I would like to ask Cristina one more question. Greece has recently introduced, as Mrs. Lazarakou explained, a 25% quota on gender diversity on boards, Cristina. Several studies show that investment managers like yourselves tend to ignore gender diversity when you make investment decisions. So is gender diversity on boards, according to your view, tied to superior stock performance? And could you give us any examples that would be, I think, greatly appreciated by our audience and the panelists? Thank you.
Thank you, Natasha. Gender diversity obviously has been in the last years, I would say decade, for some countries in Europe, a very important topic also for investors. And there are very different views on quotas and applying quotas. I would start with, in my view on the link to performance. Of course, there are various studies which show the link between gender diversity and company performance, and some studies are maybe show neutrality in this relationship. According to me, the drive for gender diversity within organization is not simply satisfying a sense of social justice, and I think most investors start looking at that. It's not only a matter of social justice, which is an important aspect, but is actually a business case. This is based on several concrete examples and studies that demonstrate that organizations perform better when there is diversity at the leadership level. It's important to say also, as women, women are not placed just to fill quotas. Gender balance on boards and in senior management as well. So we are not talking about boards, but it's important to enhance that also for senior executives, has been found to encourage better governance practices, which is associated also with increased innovation, competitiveness, sustainable growth, and overall a more prosperous society. So gender diversity is important in its concept. The issue of diversity also for driving board efficiency is not just linked to gender, as also Alexandros mentioned. It is also concerning age, professional and educational background, geographical provenance of the board members. So investors like us look at the overall diversity within the board. It's clear that more diverse management and supervisory boards can help improve decision-making regarding strategies and risk-taking by incorporating a broader range of views and opinions and limiting the potential for the so-called group think. No? This is very clear to most investors. How we see it from an investor perspective, indeed, there are some studies, as you mentioned, that may show that investors are still not 100% focused. And certainly there is still a way before diversity becomes fully entrenched also in the investment industry, because it's important that we practice what we preach. Now, also the asset management will need to align that. And in Eurizon, actually, we have adopted several policies. We have very high level of women represented in management and also on board. But what I wanted to enhance is, again, looking from an active perspective approach, from a stewardship approach. I think that diversity has become an important theme also in active investment. For us, board gender diversity provides a signal of good governance, a signal of good management quality. Whereas gender diversity, you know that there are policies in place to enhance a respect for human capital. So it's a signal, it's a sign for good corporate governance. So we also believe that diversity certainly is not a checkbox. It's not a box to be checked, but it's a strategy for economic success based on what I've mentioned before. It's a business case, I would say. Certainly it will address a cultural change in capital markets, and it's still to be it's a change in a cultural mindset. It's a change of mindset, and it will still need to happen. It has happened a lot in many countries. There is a lot to do still, and certainly Greece maybe more at the beginnings with respect to other jurisdictions. As an example, I would like to give not a company, but Italy, actually, where I've been based in the last years, and where I think quotas have brought an important increase in performance of companies, and there have been studies in this respect. But it could be a very interesting example also for Greece and for other jurisdictions as well. Just to briefly say, because I think it's extremely interesting, so apart from other countries such as Norway, for example, it was the first country to instill a quota already in 2003, but Italy put a law, a gender quota legislation for companies, listed companies, and which was effected already in 2011. Actually, at the time, the law required the less represented gender to hold at least 1/3 of board of directors and also board of statutory auditors, because this is our traditional governance structures. So 1/3 should have been represented by the least position gender. The requirement for the first term, because in Italy we renew the board every 3 years, for the first term was 1/5. After the first term, it should have been, as I mentioned, 1/3. The quota applied only at the time. It was set to apply for just the first 3 consecutive board terms, which means for 9 years for each company's renewing their board members, after which it should have expired. In Italy, achievement has been reached, very important achievements, but in January 2019, the quota legislation was actually extended even further to have 40% less represented gender on the board. However, even before this, the very last extension in 2019, Italy has reached very important thresholds, as I mentioned. And this law, I would say, it succeeded in increasing significantly the proportion of women on boards. The proportion actually in Italy, after initially, before the law in 2011, the proportion of women on board was among the lowest in Europe, which is around in Italy was around 6%. Today, it reached 40%. So actually, in the last 4 years, the representation of women on boards increased from 33% 4 years ago to 40% today, the average, I would say, which is above Europe average. This is, of course, the largest companies are more inclined to appoint women on boards, but it is an immense step forward and which actually, this is important, what I mentioned, it also stimulates an increase in women in executive position, not just on board position. Currently, Italy ranks in the 5th place in the world, having 33% as female CEOs, which was a decade ago unthinkable. Now it reached very important levels. Of course, as I mentioned, quotas are not just to put women on board, but to make companies more successful and more competitive, having a competitive edge, certainly in front of global investors, which more and more demand this diversity.
Thank you, Cristina. This was actually a revealing thesis about Italy's progress. I'm sure we have a lot of catch up to play there. Thank you very much. Before I open the floor to questions from the audience, I would like, please, each panelist to make a 30 seconds closing remark, as time is pressuring us. Thank you very much. Mrs. Lazarakou, you can take the floor. Mr. Kosmopoulos, Cristina, and then Mr. Maglaras. Thank you.
I want to close by saying that what is most important, in my view, regarding this new law, is to have a change in the mentality. Is to try to make all market participants realize how important that an optimal corporate governance environment primarily benefits the company themselves. How? By doing two things. First, by forcing them to adopt policies that would then assist them in operating more efficiently. And second, by rendering them more attractive and competitive for the investors. So we do hope that the new framework will be the basis for further strengthening the Greek capital markets.
Thank you, Mrs. Lazarakou. Mr. Kosmopoulos, please. Thank you.
Thank you. I fully agree with Vassiliki, and I think the law is definitely in the right direction. Companies must now work hard to comply, and I think in order to achieve the long-term objective of a solid compliance-driven culture, companies can very simply look at their peers, because we already have a handful of companies that are excelling in that. They are committing themselves voluntarily to standards that exceed the standards of the law. They are exposing themselves to increased scrutiny and periodic review of their policies and procedures, and they engage in more transparency. So these are definitely the leaders. They are leading by example, and I think it is good for the rest of the group to see how much has been achieved by those leading entities, because this is essentially the type of benefits they will have access to by adapting to the new paradigm. Thank you.
Thank you, Alexandra. And Cristina, please, if you can share us your 30 seconds, view. Thank you.
Yes. Yes, it was extremely interesting. I mean, this law, I see corporate governance not as an obligation. Maybe the word obligation has been mentioned quite often today. Certainly is a law, it's a norm. But corporate governance should be seen as a best practice, as a principle, as an ethical principle. So it's something that every company should apply, should implement, and should embrace good corporate governance practices. And investors, through engagement, see every company's approach, a concrete approach to the best practices. Another important aspect, maybe you have not talked too much about, is disclosure. And again, companies that will need to implement these obligations, call them like that, will need to be transparent, not only about what they comply with, what are the procedures, but also how, and how do they comply with that from a long-term perspective, not just from a retrospective perspective or from a present short-term perspective, but from a long-term perspective. Investors want to see that. What will you do next? So, as mentioned previously, it should be seen not as an obligation, but as an opportunity for businesses to demonstrate ethical behavior, and a more responsible business conduct. And investors will grasp that immediately. Thank you.
Thank you, Cristina. And finally, Mr. Maglaras, your 30 seconds thoughts.
I would like just to thank about the invitation and the participation. I want to remind to everyone that, you know, this year we had the Wirecard incident. We had Foli in Greece. We had Steinhoff in South Africa 2 years ago, if I remember correctly. So there's a lot of need for better governance. And again, under the new normal of the ESG flows of capital, I think that the companies, they should comply or they should go private. So that's it from me. I lended my time to Cristina, and I leave it to you, Natasha, for any questions.
Thank you very much to all of you. We have actually questions from the audience, and the first question is for Mrs. Lazarakou, but any of you who would like to jump in, please feel free to do so. So what is the current rating or ranking for Greece, if any, Mrs. Lazarakou, for corporate governance? I mean, is there a ranking that Greece is trying to achieve versus, you know, other countries?
Actually, I'm not aware of the ranking that we have regarding the corporate governance. I know that I'm sure that we are going to get a better rank better ranking after the specific law, but I'm not sure where we're going to be. So that remains to be seen after the new rankings.
Thank you very much. And a follow-up question for Mr. Maglaras's comments on Greek stewardship, if I may. Our participants are quite eager to understand, how do you engage? Because Cristina actually described her view as a global investor. Do you have a voting policy that you right now implement? Could you give us a little bit more color of following the new law? What would be your intentions in terms of engagement? Thank you.
Thank you, Natasha. The truth is that, yes, we are obliged now to have a voting policy, and we will communicate that to all issuers. As Cristina mentioned, all the steps, there will be gradual communication, and if there's a need to raise any issues, we have already done that in the past with all, let's say, listed issuers that we, at least we are invested in, or they are in our invested universe. So I think 1 or 2 days before, we discussed also together that there are examples in several cases regarding the ESG and specific issues. I could point that even today there was on the press a potential equity issue that could take place in a bank or in another listed company that took place a month ago. And we monitor all these things to see if we have equal treatment in shareholders. We have already addressed questionnaires from January of this year, and we will continue to do so. So there is there are companies in Greece, and there is, let's say, a handbook of ESG guidelines, and there is a process to it. Okay, I mean, the investment process has already been integrated, and there is the ESG investment process. So we will follow that.
Thank you, Mr. Maglaras. I have one more question for Mrs. Lazarakou coming from the audience. Obviously, Cristina discussed the quota rationale for Italy, but if you could just briefly tell us what was the Commission's rationale for implementing the gender quota here, please. Thank you.
we believe that we have to work more in European standards, where we see that more women are in boards. And because here we did have a law that did not really provide anything about women. I know that there were a lot of discussions regarding whether women should be, whether we should have a quota like that, whether it should be in a way of an obligation to have a gender-based, let's say, provision. However, we decided that it is the time for Greece to do this step and to take this step and try to provide this in the law, because until now there was a very small representation of women in boards, like 11% or something like that. And we believe that this is, let's say, the time in order to have something which could give equal opportunities to women to participate in boards, in a sense that we believe that this really helps meritocracy and helps in reality helps the women to have same equal opportunities with men, because in Greece, the women did not really have equal opportunities as far as board representation is concerned. That was the reason for recommending this to be provided in the law, and not only just a recommendation to be taken as a soft law, let's say, provision.
Or as a pledge, which could very well be a pledge from the company side. And I have one final question for Cristina, please. Cristina, based on your experience engaging with the foreign companies, obviously this is a law addressed to the Greek listed companies. What would you think would be the most pressing issue when facing, the corporate governance challenges? What would you see as the most pressing issue for them to address?
If we are referring to the law, I would say is the outcome rather than output. So I imagine, and I'm sure that most Greek companies will align with the new law. And looking at board composition, there will be a lot of efforts, and it's not easy within a year or so to have the most fit and proper, as Europe likes to call them, composition of the board. But I think the most pressuring issue will be aspect, and what investors will want to discuss is the board effectiveness and the implementation of their strategy, the implementation, how do they function, how effective are they, apart from just the composition element. So it will go a next step, and I would tell companies that this question will start arising already from the first year. So why did you choose these members within the board? What is your strategy? How is your governance aligned with your business plan, which is certainly long-term, has a long-term perspective, because as we know, industrial business plans have 3, 5 years, some 10 years horizon. So the pressure will be on the implementation of policies and the effectiveness of the board, which investors will want to understand better, because the composition will certainly align with the law requirements. So it will be a further investigation on their actual performance. Thank you. Thank you for the question.
Thank you, Cristina. At this stage, I would like to thank all participants. Mrs. Lazarakou, Cristina, thank you very much for joining us from Italy. Mr. Kosmopoulos, Mr. Maglaras, I would like to thank the audience very much for this very interesting participation. On my side, it has been a very big honor to host this panel and exchange our views on the new law. Would be delighted to be back and discuss how the law has progressed in a few years. I would like now to pass the floor to Mr. Bournozis for his closing comments. Thank you.
Well, I would like to thank you all for really a great discussion. Not only very insightful, but also extremely well prepared. I thank you very much for the slides that you shared, the points that you made, and of course, we had with us a very distinguished group of panelists, starting with Mrs. Lazarakou, Cristina, Alexandros Maglaras, and Alexandros Kosmopoulos, and of course with Natasha. Thank you very much. As you can see from the level of interest, we exceeded the 1 hour by actually 20 minutes. I think that indicates the level of interest and also the quality of the content that you put out with people responding and asking questions. So thank you very much. I look forward to our next webinar, and actually I look forward to our conference that will take place not in New York this time, even though my background shows New York. It will take place online on December 15, 16. I look forward to having you all with us. And again, thank you so much for sharing your views today. By the way, this webinar will be available on demand at capitallink.com for anyone to come back. And I mean, we're creating a library of information for people to access over time. And thank you for contributing with your insight and comments.
Thank you very much. Thank you very much for having us.
Thank you very much.